So a couple of years ago, just like most teenage boys, I came across The Wolf of Wall Street and I sat there for a couple of hours thinking, Jesus Christ, I want to be like this man. And ever since, I've moved on to the real world and watched YouTubers such as Nate O'Brien and Graham Stephan and really started trying to teach myself about the stock market. So today's video is about my first investment into the stock market because I very recently turned 18, which means I'm now legally able to invest into the stock market.
Ooh, you're hard showing off.
Now, just because I'm legally allowed to do it now doesn't mean I'm any good at it, as you're about to find out when I pull up the stock portfolio that I currently have. To give you a bit of background before we jump in, I've been looking to invest into the stock market for absolutely months now, if not over a year. I've always wanted to do it. I've always just wanted to have a go at picking some stocks and seeing how they do. But now that I've actually done it, and now that I've put a bit more time into research and so on and so forth, I've realised that maybe, for me personally, the strategy moving forwards might just be investing the majority of my money into index funds and taking that safe return. Now, I know that's really boring, but it's historically performed very well and been the smart thing to do. But don't get me wrong, I'm going to have some individual stocks within that stock market portfolio as well that I can, put money into that I don't mind losing, to say the least. And I know that should be the same for the index fund, but more so for these individual stocks, it's going to be money that I can spare. And why do I say that? It's because every time we invest, there is a risk there. So you've got to be prepared to lose all the money that you put into the stock market, into real estate, into cryptocurrencies, whatever it might be. There's always risk when you're investing. So without further ado, let's jump into this stock portfolio. I'm going to talk you guys through the 3 purchases that I made and the 3 purchases that I'm going to make during this video. So let's chuck the screen recorder on. 3, 2, 1. Bang, we're in, and let's jump into free trade, Face ID, and here we go. This is my stock portfolio at the moment. But just before we get into that, here's a quick message from today's video sponsor, the like button.
Subscribe to Bart Finn on YouTube for 1,000 years of good luck.
Seriously guys, if you could help me push this video out further into the YouTube algorithm with that like button, I'd be more than grateful. And with that being said, let's get back into the video. As you can tell, I am £5.48 down. Now that £254 isn't all invested. There's about £161 there in cash that hasn't been invested yet for later on. But let's walk through my investments. So to begin with, the S&P 500, of course, and that is VUAG. So not the one that produces dividends, but the accumulating fund that reinvests the dividends itself on a fund level rather than on the broker level. So dividends don't come in through this one, but they're reinvested at the fund level, if that makes sense. So my investment into that was just 1 share, which I paid £57.55 for, and it's currently worth £57.62. So that's a gain of 0.12% and 7 pence. My first 7 pence made in the stock market, which is absolutely unbelievable. And I think moving forwards, the strategy for this is to continue to invest and not really look back. I don't think I'll ever sell. I'll just continue to put money into the S&P 500 and watch it grow, and hopefully compound interest over time will help me accelerate that. As you can see here, of course, history shows that it's certainly a sound investment, and of course historically it's gone up at a rate of about 7% per year. So there we go, that's the first one. Moving on to the second purchase, it was a fund management company called Jupiter. Now, why did I do this? I'm going to be honest with you, I'm not going to pretend I'm some stock expert. I was reading a couple of articles on the internet, and I read a stat that Jupiter was actually holding less assets under management than most fund management companies out there, and then there was something there about them experiencing growth, blah 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 blah, whatever it might have been. I read an article basically, and the article told me to buy the stock, so I bought the stock. And to be honest, to begin with, it was doing relatively well. And you know, since I bought it, it wasn't doing too bad. Let's just say that. But now, as you can see, my average buy-in was about, you know, £2.95, and the current value of the stock is about £2.72. So on my investment, we're down 8.11%, and I've lost £1.68, which isn't life-changing money, but as far as an investment goes, that's 8% down. Not ideal. But again, the plan for this is to keep the stock, and hopefully it will rebound, and I have every confidence that it will, based on nothing, because I'm not educated enough in the stock market just yet. But I'm going to keep. I'm not going to panic sell, and you know, it really isn't life-changing money, so I'm just going to keep it there, and hopefully within time it will rebound. So the third and final purchase that I've made on the free trade app is CuriosityStream. Again, this was another article that I read, and there we go. This is the results. Yeah, I invested at a level of around £9.68 per share. This is an American company, so it's worth around $10 now, which is obviously a lot less in pounds. And this was the biggest blow. So again, I mean, the loss is only £3.68, but as far as an investment goes, you know, it's a loss of 18.5%. Now imagine I had put £1,000 in or something like that. That would have been awful. Luckily, I started off small and put in small amounts, and I've learned from that. But again, this company has only been on the open market since February. They only just IPO'd, as far as I'm aware. That's what I read anyway. Yeah, February last year. And it's genuinely, you know, CuriosityStream, for those that don't know, it's basically the Netflix equivalent of educational content. And I just feel personally that there is a lot of potential for that sort of space in the media. So I'm certainly going to hold, as much as it obviously hurts that it's down 18.5%. But, you know, the stock market recently hasn't been performing too well in general anyway. So, again, it's just one of those things that I'm learning from, and that I'm just going to hold for forever, really, until I can sell off my principal investment and keep the rest. But there you go. Those are my three purchases so far: S&P 500, Jupiter, and CuriosityStream. I know I haven't given too much of a reason behind all of them, but the S&P 500, I'm sure everyone here that's watching will be able to figure out for themselves, purely because it's historically done very well. So I feel we should now put some more money into the stock market. As you can see, I haven't been very good at this, but I'm going to queue some orders, and hopefully they do well. So the first one I'm going to buy is, again, it's going to be the S&P 500. I'm just going to buy another share of that, and I'll continue to do that for a long period of time. But let's buy one today. Let's queue one. Confirm buy. There we go. We have queued another £58 into the S&P 500, which is exciting. Hopefully that will go through tomorrow morning or Monday morning. It's a Saturday today, so it won't go through. Okay, the next one I wanted to buy was Coca-Cola, a company that has seen increases in its dividends since it's been trading every year, and it's certainly it's an incumbent firm. It's not going anywhere, let's be honest. So I just want to get a couple of the big dogs into my portfolio and diversify it slightly, so that we see everything balance itself out nicely, and hopefully we see a return anywhere between 3 and 7% on a yearly basis. I'd be happy with that personally. Of course, I'd love, the big and bold 20% return, but I'm no Warren Buffett, and at the moment I'm not really educated well enough to be doing that sort of thing. But anyway, let's invest into Coca-Cola, and let's purchase a share of that. So, $57 US. Let's put £50 in, and that should give me just over one share. Sorry. Let's review the order. Confirm buy. and then when the market opens, we will be owners of Coca-Cola, which is very exciting. And the last one, again, a very incumbent firm, APPL, which of course is Apple. We're going to put around £50 into this one as well. Let's just put the rest of the capital. We've got 53.69, 54. I wonder if it'll let me do that. No, 53.69. And that gives me just over half of an Apple share. So let's review that, confirm the buy. There we are. We are now also owners of Apple. Well, we're not yet, but when the market opens, we will be. So, there you go, guys. There is a brief summary of my stock market journey so far, which hasn't been very fruitful, but I'm confident that with some learning and with the right sort of guidance moving forwards, I'll be able to improve on my performances so far and take things from there. It's a learning journey for me, and of course I'm putting in money that, you know, I'm all right with losing. I preferably wouldn't, but I'm all right with losing it. And it's going to be a slow journey where, you know, where I'm going to learn and hopefully share that with you guys along the way. So if you'd like more stock market videos, do let me know down below. And equally, if you have any tips for stock market investing, general strategy, and things like that, then do leave a comment down below and let me know, or just shoot me a DM on Instagram, and I'll be more than grateful to speak to you about that and go from there. But for today's video, that's it. Hopefully you guys have enjoyed. And yeah, we've got some more stock market content coming along, and hopefully when we come back to this portfolio in a couple of weeks or a couple of months' time, there'll be more positive news to share. So once again, thanks for watching, guys. Make sure to smash the like button for the YouTube algorithm, and I shall see you next time.